All right, guys, if you've been watching this channel, you know that I've been very critical of Cathie Wood and Ark Invest over the last few months. Now, it's not for really the same reasons that CNBC and everyone else is piling up on her. And I get that there is sort of a lack of tact in kicking somebody while they're down. However, she is a money manager and she runs a money management company. And if you're going to ask people to give you money to the tune of billions of dollars so that you can grow it for them, well, then you are not beyond any sort of reproach. But beyond picking shitty stocks, which we will for sure get into, and we're all guilty of that at one point in time, right? Picking something that isn't winning. I'm not going to get on somebody for picking a loser. Beyond that, there are a few downright dishonest things in my opinion. So let's get into the dumpster fire that is Ark Invest and why I will likely never put another dollar into an Ark Invest product. All right, first let's address the big elephant in the room, and that is the stock picks themselves. Every single one of Cathie Wood's stocks is in a bear market, but two. Now, these numbers aren't perfectly up to date because Shopify is back now above bear market territory, but you get the picture. This is a shitty track record when we're talking about how many stocks are in here. There's about 50 stocks in here, and although, like I said, nobody's beyond picking a loser, for your whole portfolio just to be comprised of losers and for you to be a money manager accepting funds from people, hard-earned money from people to manage their money, well, you expect a little bit more, obviously. And not only are most of these in a bear market, they are in deep bear market territory. We're talking about some of these are 80% down from highs. A lot of them are 60, 50% down from highs. And I'll get to why that is mathematically very relevant and why it will almost be impossible for these stocks to climb out in unison from the holes that they've dug themselves in. Ark Innovation is down 24% over the year. To contrast that, if you just put this in an S&P index fund, you'd be up 28% this year. Now, it's not just the terrible stock picks. It is also the distribution of these picks. If you guys are fans of this channel, you've been watching my live streams, and every time I get questions about Ark, I always answer in the same way. How can Zoom and Teladoc be in your top 5 holdings as a money manager that wants to take themselves seriously or respectably? I just don't see how that is. Now, again, I don't mind investing in some of these names for a small portion of my portfolio, but these are in your top 5. Even as vaccinations were rolling out, even as it was clear that the economy, at least in this country, was itching to reopen, even as it was clear that we weren't going to go into lockdowns and that some of these variants that came out, Delta, Omicron, were less ominous than once thought. You know, even as these valuation grades were getting more ridiculous, even as the guidance coming out of earnings weren't that great, she still dug, or the money managers over at Ark still dug their heels in and kept up with this sort of ridiculous portfolio distribution, in my view. You know, and maybe I'm not understanding what is the point of the Innovation ETF. I mean, maybe this is something where you're expected to lose 30, 40% of your money and have to hold out for years until these names actually start developing. But this brings me to my point number 2, which is it is a mathematical impossibility what Cathie Wood and Ark are predicting for their compound annual growth rate. Not an impossibility, but it's implausible. So a couple of weeks ago, she said that our 5-year compound annual growth rate expectation has gone from 15% at the peak in March to nearly 40% CAGR. And the author of this article on Seeking Alpha, his or her name is, actually, I don't know why I can't find it, Monocle Accounting Research. So the author of this article says, putting aside the factual error of when the peak of Ark occurred, it wasn't in March, it was February 12th, the mathematical nonsense of how a 15% 5-year CAGR turns into 40% 5-year CAGR when Ark has fallen 39% since its peak, we find it highly unusual to hear a professional fund manager make such an audacious claim about the returns an investor can expect when investing in their fund. In our opinion, a public pronouncement such as this is overly promotional at best. Now, I agree with what this person is saying, because from a mathematical standpoint, and I always show this document right here, this image, I always show this to people when they are bag holding loads of stocks that are down 50, 60%. And I don't think that people get the sense from a mathematical standpoint what your stock needs to do in order just to get back to break even. So if you have a stock that's down 50%, I don't think people really understand that your stock has to rally by 100% just to get back to zero. If your stock is down 80%, as we just showed in some of ARK's holdings, the stock has to rally by 400%. And that is just to get back to zero. That's just to get back to break even. That's not even to make a gain yet. So when you are down 40% on the year and your portfolio looks like this, where tons of your stocks are in the 50 to 80% from highs range, how can you then say that an ARK investor can now expect a 40% compound annual growth rate? That means that a lot of your holdings, now I'm ignoring weightings, obviously, because the ones that are down 50, 60, 70, 80%, it doesn't mean that all of those are top weighted in the portfolio. But besides the point, that just means that you need to have some insane, miraculous level rallies in some of these stocks just to get back to break even, let alone see a 40% compound annual growth rate. So this to me is really the first claim where I sense a little bit of dishonesty. And maybe it's not dishonesty. Maybe it's just blind ideological belief. Maybe there's some sort of cognitive dissonance going on there because, taking losses like that and having the pressure of billions of dollars under your feet might lead one to start making some pretty prophetic pronouncements that are incredible. So maybe that's the case. Maybe it isn't dishonesty. I don't want to, really ascribe something so nefarious to somebody. However, this next part, point number 3, is where I think there is some dishonesty. So this article by Jason Capsule came out in Seeking Alpha as well. And what he says is, Cathie Wood sells ARK's high conviction names even as she implies it's time to buy them. This is what I think is extremely unethical and dishonest. ARK Invest Cathie Wood said in a recent interview that when her firm's funds are losing ground, ARK looks to gear its positions towards the company's highest conviction stocks. However, a Seeking Alpha analysis of Wood's voluntary trade disclosures shows that she's actually been dumping some of her high conviction names in recent days instead of buying them. So in that Bloomberg TV interview, she said, especially in periods where our style is out of favor, what we usually do is consolidate our holdings towards our highest conviction names. Those are the names in our top 10. So Tesla, Roku, Teladoc, Square, Shopify, and so forth. However, when you look at her trading record around the time of this interview, she was actually selling all of those stocks except for Roku. In the interview, she seems to imply that in such down periods, ARK will buy more of the firm's high conviction names instead of selling them. After this article came out, an ARK spokeswoman told Seeking Alpha later that despite the ETF's recent sales of some high conviction names, our long-term thesis has not changed. ARK went on to state, we will also take profits in stocks that have done well in the short term to strategically move into other names that are more undervalued at the time. Now, it's important to note that none of what they're doing seems to be illegal, but just because it's not illegal doesn't mean that it's not unethical. And now I'm glad that I actually waited to do this video because yesterday, as of the time of this recording, Cathie Wood still continues to sell a large stake of ARK's holdings. We're talking about everything from Roblox to Skills. A lot of these are at the bottom, selling at the bottom: Hood, Robinhood, Square, Spotify, Shopify, Zoom, etc. ARK Next Generation ETF, ARKW, also dumped a sizable amount of shares across 40 stocks. Nano Dimension, Vuzix, Twitter. Now, they claim that all of these transactions was for the purposes of raising cash for the 2021 annual ETF distribution. Because if you didn't remember, and I wouldn't blame you, ARK actually does pay a dividend. Regardless of the bad performance, ARK does pay an annual dividend. So in order to raise money for that dividend, she's claiming that they are selling those stocks in order to raise cash. Now, I'm sure that's a huge portion of it, but also I just can't help but think that, they might be switching their strategy up for 2022, might be locking in some losses. There might be some, tax benefits to locking in those losses. I'm sure that they have less conviction on some of those names. I mean, we're talking about a ton of stocks that were in bear market territory. So I'm sure that she has less conviction in a lot of these names, and she's just dumping shares in order to raise cash, not only to pay for the dividends, but also to maybe and hopefully rejigger some things for 2022. And lastly, I find this laughable, but Cathie Wood is testing ARK on steroids, basically a short strategy. Now, what's hilarious about this is there is actually an inverse ARK ETF. It's actually called SARK, and it's put out by Tuttle Capital. And if you had bought SARK when it came out just a little over a month ago, you'd be up almost 25%. This is basically doing everything inverse of what ARK is doing. So it's hilarious that ARK is actually testing a short strategy when all they have to do really is short their own their own portfolio, and you would make money on that ETF. And I just find it hilarious that she says, we have been a net buyer and we pick our spots. Over time, we pick our spots. We do not buy on spikes. But it does seem like she sells the drops, right? Buy the top, sell the drop. It does seem like ARK does that quite often. But yeah, that is why I will likely not buy another ARK-related product, just because I don't respect their decision-making. And yes, I can see what some of you will say that, hey, you know, she's a professional that has made billions of dollars and she runs a fund. What do you know? Well, nobody is beyond reproach. Like I said before, you know, huge hedge funds earlier this year were taken down not once, but twice by a bunch of apes online. These people are not infallible. They can make decisions. People online that have spent tons of time behind their computers analyzing charts and doing their own DD, they can actually challenge some of these longtime money managers in a lot of ideas. There's nothing wrong with that. And if you must know, and I have to qualify myself, yes, I have a degree in finance and I've worked in the field. I'm not just some auto mechanic who sprung up out of nowhere and is now questioning some of Cathie Wood's decision making. But even if I was an auto mechanic and I had studied my shit, there's nothing wrong with that. And like I said, I don't mind some of these names. I might actually buy some Teladoc here. I might buy some Zoom or Roku or whatever, but I can make my own decisions. I don't need to buy an innovation fund full of stocks that are down 60 to 80% from highs and hoping that, you know, they grow 200 to 400% just to get back to break even. Like, I don't need to do that. I would much rather invest in an index fund that mimics the NASDAQ or the S&P 500 and then pick my spots with some of these more speculative stocks that could have a, you know, potential 40% CAGR growth rate. But I don't need to invest heavily into a fund that, in my view, is making some terrible decisions. Anyway, that's just my opinion. Do what thou wilt. If you get anything out of this video, leave it a big fat thumbs up. Let me know what you think in the comment section. Subscribe to the channel, hit that notification bell, sign up if you want access to our beautiful trading group. Link is in the description below. Stay safe out there, traders. Peace.